All right, good morning, everyone. Let's kick it off. Okay, last night's session and the U.S. markets, we obviously saw a little bit of a rally that faded into the to the evening session. We did finish up pretty nicely on the Nasdaq. We're up about 1% at a point, up about three quarters of 1% on the S&P before fading down, only to be finish up a quarter of a percent. So not a whole lot of follow through. Maybe potentially a little bit indicative of a bit of a dead cat bounce in the middle of a sell-off, but either way, it definitely faded a little bit at the end of the session. Not a lot of follow through. What was interesting as well is that we also had some what I think should have been taken as very market positive comments out of Fed Vice Chairman Stanley Fischer, who, people were really worried that Fischer and Janet Yellen might butt heads in terms of their position toward the markets, with Fischer potentially being a little bit more hawkish than Janet Yellen. And after yesterday's comments, it definitely looks more like he's sitting in the same sort of camp as she is, and definitely a lot more dovish than people thought in the market. So it should have been probably a real positive for the market yesterday, and ended up not really giving it that much of a boost. So I think that's important. All right, and looking into the Asian session, we had a bit of mixed action. The Shanghai and the Hang Seng, which actually finished the day in the red. The Nikkei actually was up 1.7% on the morning session, and really just faded the entire day to finish basically flat on the day. The Australian market was the real outlier, very power market on the day, obviously led up by the mining stocks, but I think mostly on the back of yesterday's action here locally. I mean, we had, in the UK yesterday, we saw Rio Tinto up 3.6%. We saw Anglo's up 3.3%. Billy's up about 2%. So the mining stocks really drove things in Europe yesterday, and probably just playing catch up a little bit there in Australia on the back of yesterday's session. So I think muted reaction out of Asia this morning, slightly softer open out of futures, probably looking about appropriate after yesterday's huge rally. Right. This morning we had some data out of Japan. We had the PPI numbers, which came in a touch lighter, and we had industrial production, which came in a touch lighter than prior numbers, as well as capacity utilization, which also looked a bit weaker. We had current account balance out of France, which comes out in just a little bit. We've got Italian CPI. We've got the ZEW surveys out of Germany and out of the Eurozone, which have definitely been market movers. I think what's interesting is, as of late, we've started to see the data turn a little bit south out of Europe, and that's going to be something that the market's starting to pay more and more attention to. Everyone had kind of forgotten about Europe and the problems in Europe for a long time, because we were in the midst of a recovery and things were starting to recover nicely in Europe at a point, and then all of a sudden, over the last month and a half, 2 months, we've really the data series has really turned quite negative out of Europe lately, and even in Germany, we've seen some really disappointing numbers. We've seen some of the GDP numbers out of some of the bigger countries there come out negative recently, and I think this is going to be really, really important going forward. This is the time when these economies should really be firing, and the fact that they're not is worrying. Obviously the central bank there the ECB has been getting looser and looser on monetary policy, but I think it's important to see how this continues to play out. There's not a whole lot more that they can do unless they start really doing some sort of bond buying program, which might be difficult given the makeup of the way the ECB works. So this is going to be I think a big story over the next few months. Is going to be the Eurozone story and how they're going to try to fix this. Remember, I mean, if we had a pullback, if we were to have a recession out of the rest of the world, I think things could get messy again in Europe, and we could really get some bond worry issues there again. So this is just maybe the start of what could be something interesting to start to come out of Europe again, and we'll continue to monitor that closely going forward. Right, let's get into the maps here. Okay, the first chart that we're going to look at here is Discovery. And let's just zoom this all the way in. Discovery yesterday you can see there at the top of the wick, was looking at a point like we were getting ready to make an assault here to the 100 Rand level. We literally traded right up to the resistance level at 99 bucks and faded off of it. As you can see there, like I said, from the wick, this is a 2-year chart. I'm just trying to get that previous high in there. But this is a huge sort of, it looks like maybe a continuation that's been building in consolidation right under this level. We've kind of had about a 3 or 4 Rand consolidation range between maybe 95 and 99. That's been going on for over 2 months now, or as much as 2 months now. So we came up and tested that level at 99 yesterday. We need to see it get above 99 for us to really see a breakout. But if we see a breakout, the target on this for Discovery is really going to be huge. So just keep that in mind. Discovery above 99, you probably want to see it get above 100 just because of the big round number, but the thing can really potentially cut loose if it gets above there. All right. We're going to look at FirstRand. Now this chart hasn't exactly played out as of yet, so take this with a pinch of salt here, but potentially looking a little bit head and shoulderish in the short term for FirstRand, up here around 45.50, 44.55, 44.50, somewhere in that neighborhood, potentially setting up a little bit of a head and shoulder here, which could lead to a bit of a sell-off. If we saw that drop and we saw us get below the neckline here, which is probably at about 42.70, then we could probably see about 2 Rand 30 a downside from there, taking us down closer to the 40 Rand level. So just watch this level today at 44.50ish, 44.55 maybe, somewhere in there. See how that plays off. I think what we're going to need to see for this pattern to really start to set up as being a bit bearish is for us to push below the 43.80 level, and then the likelihood that this could actually play out starts to become a little bit greater. So just this hasn't shaped up as of yet. Just keep that in mind. We can't call this head and shoulder until this thing drops the neckline, which is quite a bit lower than this, but it's potentially setting up. So just keep that in mind. All right, Anglos, you can see here at this 288 level again. Yesterday we came up and tested it intraday. We dropped it by marginally into the close, but I think making it very quickly after trading down closer to 270 only 2 sessions ago, we're right back up testing this resistance. I think it's important. I think it's something to take note of. If you look at Anglos in London, we did close marginally above this the 16 pound level, which 16 has also been a major level, as you can see here, and was kind of maybe a bit of the shoulder line in the short-term head and shoulder that we saw before. So 16 definitely also in pounds, a big level, which we just crossed above yesterday. So these things, these mining stocks are really started to feel like they're starting to turn the corner to the upside a little bit here. There might still be some real meat left on this bone. I think we got to get above 1650 in London for this thing to really be able to break out. But here locally, obviously, like we said, we've got only have to get above this 288 level for us to probably really start to accelerate again to the upside. And the breakout that we had before, it ended up failing. This second move higher could really be the one to push us to 300. Right. Naspers, beautiful run out of Naspers yesterday. This was a classic pattern that we were showing a couple weeks ago. I'll zoom it in a little bit further here. So we broke out here. We broke out from above 1355. Perfectly symmetrical, beautiful shape pattern. One of my favorite setups in the market at the time. Probably broke out, went right to our target of 1400, pulled back exactly to support again, or more or less exactly to support again around 1350, 1355. Only to reverse back yesterday's session, new closing highs. Very close to new all-time highs this morning. Fully expected to make new all-time highs with Tencent pushing up close to 1% in Hong Kong. With the way that this looks at the moment is that we're probably setting up for a little bit of a continuation move up to about 1450. What's interesting is that we've got earnings tomorrow out of Tencent, which will totally dictate this the move of the stock on the day. The previous couple earnings reports out of Tencent gave way to 50, 60, 70 Rand moves out of Naspers intraday on the back of those earnings, which normally come out in the middle of the day, if I'm not mistaken. So just be careful out there. I wouldn't say that breaking up the new highs this morning, might not be the greatest opportunity. I mean, I can't speak for earnings tomorrow, obviously, but if we get above this level, and we will push above this level early this morning, I think that you've got earnings coming out tomorrow where everything can change and change in a hurry. So just be careful there on this pattern, but just know that it's out there and that things are looking bullish. Maybe the market's telling us that earnings are going to be really good. They're expecting a 50% increase in net income tomorrow, so I think the bar's been set pretty high. All right, looking at MTN here, popping up yesterday to close at basically right up at previous closing highs and all-time highs, and this one got steep very quickly after earnings and after that false breakdown below the 220 level. Once we dropped that in the reversal there on earnings, it really gave us a good opportunity that second day on earnings to jump in. And this is going to be a key level. We've seen MTN very often do this same sort of thing. I'll back out just a little bit here so we can look at those types of moves. So we saw it here. We saw the steep pullback, and very quickly saw MTN pop up here to the 220 level. It took us a lot of consolidation. We actually even pulled back off of this level, as you can see there, sub 210, before we were able to turn around and make the breakup. We saw the same sort of thing happen back here in March of last year. Pull back. We went right back up, basically tested previous all-time highs, only to really fail it, and then pretty quickly start to regain it and break out again. So we've seen the same sort of thing happen again. Here's another example. In August, we pulled back off of those highs, popped up very quickly to get there in October, only to drop down about $10 before it really made its breakout. So this is kind of a common theme, a common move out of MTN, that this sort of thing happens. So I wouldn't be surprised to see this thing, spend a day or two consolidating here and even pulling back before we start to push higher maybe and break out to new highs. So that just be aware that that's sort of the typical movement and pattern that we've seen out of MTN in the past. All right, if you look at AngloGold here, we're looking at a one-year chart, and you can see that AngloGold has broken out on a bit of a flag pattern, bit of a bull flag. So we were able to hold this 180 level as well, which I think is really significant. And it's kind of done it without a whole lot of move out of the gold price. In fact, I think we were higher about 2 or 3 weeks ago. Sessions on the gold price were maybe up 10 or 20 rand or $10 or $20 north of this, and the rand hasn't really been weakening either. So this thing, the golds have actually been outperforming of late, which is interesting given the environment. But definitely popping out of the top of this little level here probably gives us a target up to around $200 in AngloGold. So watch this one in the next few sessions. Maybe outperform yesterday. They had some numbers as well. So running on the back of numbers is also important. All right, and the last one we're going to look at today is Nampak, which yesterday broke out to a new all-time high and new all-time closing high. As you can see there, we put in a lot of consolidation between about 40 and 34, 35 over the past couple months, and we finally broke out above 40 to get back up to all-time highs. Consolidated there for the last couple weeks, and then now we're breaking out the new all-time highs. I mean, this pattern definitely gives way potentially to at least $7-8, probably close to $10 upside here. So definitely a much higher target in Nampak from these sort of levels. And that's it for today, guys. Good luck out there.